Be Wealthy and Smart, episode 1145.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I'm going to do a quick market update because January has taken off like a rocket, maybe a little bit too fast, and that has me slightly concerned in the short term. Not anything serious, but it feels like things have really gotten ahead of themselves. Let me tell you what I mean. The Federal Reserve basically has been telling us that they're going to continue to raise interest rates, but suddenly the bond market and the stock market are acting like that's not going to happen. They're acting like the Fed's going to pause or to stop. But that's not what the Fed is telling us. The Fed is telling us they are still going to raise interest rates probably 0.25% at their next meeting, which is at the end of this month and into early February. If the Fed is still on track to be raising interest rates in the foreseeable future, the market is out of line with that assumption. And so something has got to give. Now, the Fed is in a quiet period where they're not talking about rates right now. And so the market is doing what it's doing in hopes of a positive expectation. But if the market isn't right, and if the Fed continues to be aggressive, then the market's gotten ahead of itself, and we could be due for a pullback. That's just what it feels like. So many investments have raced ahead so far, so fast. I know in our VIP experience, I'm very surprised that in 3 weeks, some of our investments are up 18%, 15.5%, 14.8%, 15.3%. I mean, these are returns that are typically annual returns, and these have been achieved in the first 3 weeks. So that concerns me a bit that markets have gotten ahead of themselves. And yes, while we are ricocheting back after one of the worst years in stock market history, it doesn't need to all happen in the first 3 weeks of the year. So I just want us to be cautious here. I think this is not a time to be buying or to be getting into the market or feel a sense of false confidence, because all the Fed has to do is come back and reiterate that they are going to continually raise interest rates, and that is going to make interest rates rise again, the market sell off again, and things get back into equilibrium. Right now, it just feels like the market's gotten ahead of itself. Interest rates have declined a bit too much. Everything's built on hope, and nothing is really being built on what the Fed is actually saying. They actually have not changed anything other than possibly raising 0.25% instead of 0.75%, which they did several times last year. It's very interesting to see that the NASDAQ has taken the lead. So we have growth stocks really coming back with a vengeance. And NASDAQ is up 8.46% year to date already. The S&P 500 is up 4.62%. And the Dow is up 1.35% year to date. One of the investment areas that's really done well so far are the precious metals mining stocks. The junior gold miners are up 11.7% year to date, and the large gold miners are up 12.32% year to date. So the mining stocks are really taking off. Gold has been doing better than silver. Silver's lagging a bit and is actually down on the year 2.23%. So while everything has been off to the races, just a little caution here. Things feel like they're getting a little bit frothy, and we could be having a pullback into early February. I think that would be more of a time when it could be interesting to do some buying. Is early February. We could be seeing a bottom there for crypto. We could be seeing a bottom there for stocks. I do feel like things are getting ahead of themselves here, and we are due for a pullback. So I just wanted to review what's going on in the markets with you and let you know that until the Fed changes their tune, we need to take them at their word for what they're saying they're going to do. Even though the economy seems to be softening and definitely the job market, we're having all these layoffs, that's something that the Fed actually wanted to see. So we are getting some of that. And in time, I think they will come to the conclusion that they don't need to be as aggressive and they'll see inflation come down more. But in the meantime, they're not giving us any signals that they're going to pause or wait or stop. And even as we look at the fear and greed index, the sentiment indicator, we are solidly on greed. We're not in extreme greed, but we are solidly on greed. So we're clearly out of fear and extreme fear. We're away from neutral. And it seems like the markets have gotten ahead of themselves. So be a little bit cautious. Don't be aggressive here. I do think there is a buying opportunity coming up in a couple of weeks after we get on the other side of this rate hike with the Federal Reserve and we can get fresh information from them at the next meeting. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And you can find all of my wealth mentoring podcasts on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.